Hi, everybody, and welcome to the weekly market wrap for October 27th, 2017. I just wanted to keep in touch and let's take a look at the daily chart of the S&P 500 regarding what's been happening this week. It's actually been a crazy week. We had a bit of a sell-off towards the beginning of the week where we see a little bit of a downtrend happen there, and then all of a sudden we had this big snapback rally after Thursday night's earnings releases from Alphabet, which is Google, Microsoft, Intel. We've just had Amazon, which is one of the bigger beats as far as earnings expectations go, and it's been quite a move. And this is just the S&P 500 that we're looking at, the ETF. But if you take a look at the Nasdaq 100, it's even more pronounced, where you actually see that downtrend for the first few days of the week, and then all of a sudden just a rip higher to new all-time highs. So I touched on this a little bit last week, and what I was saying was that everybody anecdotally that I speak to is saying, yeah, the market's high, but we have to have a pullback. It's got to happen. It's going to happen soon, and everybody's nervous. So what winds up happening is that still means that a lot of people are in cash or a little underinvested than they want to be. And what winds up happening is the market gets good news, and everybody who's underinvested hits the panic button, or the fear of missing out starts to really become a big factor, especially for people who are professionally managing money like myself. It's always very, very stressful when you're underinvested and the S&P 500 is going higher, because you know what's going to happen at the end of the quarter. You're going to have all your clients receive your statements, and if you didn't do as well as the S&P 500, they're going to turn around and say, "Hey, how come you're not doing as good as the S&P 500?" And that's what's actually interesting about this. I think part of the tipping point that actually got a lot of people to just rush back into the market was the earnings, for one. And then secondly, the third quarter GDP numbers came out this morning, where they were 3% growth versus 2.7 expectations. And what was interesting about that is that actually included all the hurricanes. So, I mean, there was a lot of disruption in Texas and in Florida, and even the fires in California, but not as much as far as disruption in the economy. And the GDP is still growing really high. So those are two big things that I think sparked the rally. And I think we have more of a fear right now, or a risk to the upside, of just a parabolic move that it kind of grabs everybody in cash and throws them back into the market because of the fear of missing out. And the other thing that's interesting, and I touched about on this a few weeks ago, was that President Trump is going to announce who the new Fed chairman is. It's not going to be Janet Yellen, who we have now. It looks like it's more going to be Jay Powell, is what I'm hearing. And Jay Powell is kind of more of the same with Janet Yellen as far as the same monetary policy. However, he's a little bit less on the regulation side of things. So that's what's happening with the markets. We had a great week with the newsletter. We actually pulled off 4 winners and 1 loser, and we'll just continue to make it work here. So we're doing good. We're getting a market that is that's given us some opportunities, and I wish you guys the best of luck, and hope you guys have a great weekend. And I'll definitely be in touch.